Good morning, everyone. Welcome to today's webinar. Sorry about the late start. My name is Anita Basirika, and I am the Products Manager at Magezi Harvest Group, and I am co-hosting today's webinar with our Magezi Harvest Group CEO, who will introduce himself. Over to you, my co-host.
Well, thank you for joining us today, good morning, in Uganda. My name is Magezi Leonard, Chief Executive Officer at the Magezi Harvest Group. We are going to be talking about the dark side of big capital. Originally, I published a piece on this same topic, which I titled The Pathology of Big Capital, but we thought that pathology might be a little bit harsh, so we decided to simplify it by saying the dark side of big capital. So what we are talking about is not really the size of capital, but we are talking about the accountability gap that is presented by big capital. But big capital here, we are referring to big companies, let's say telecoms, banks, insurance companies that come by way of large investors or big-time investors, enter the market, give jobs to a huge number of people, pay the bulk of our taxes from the corporate class or from the business community. But at the end of the day, it does not mean that they should buy the law, or that they should buy away accountability, or that they should operate according to their own rules. So who are the people that we are targeting in this webinar? We are talking to somebody that works inside big capital. We are talking to somebody that interacts with big capital on a day-to-day basis as a customer, as a partner, as a service provider, so that you can know what trouble you are likely to face when dealing with these people, and what would be the recourse that you can pursue in order to play in a market that is fairer than it usually is if you're not vigilant and if you're not well informed. So this is an informational session. It's an expository session where we are going to be bringing up these things for you to be able to know how to navigate the challenges that you might face when you're interacting with big capital. This interaction could be in form of, a bank that has treated you unfairly, a telecom that has treated you unfairly in the provision of their services. It could be an insurance company that is making it difficult for you to get what is due to you. It could be that you have been working with them as as a vendor, but then you are having trouble solving the challenges that you are facing with them. So how do you proceed? What should you know as you interact with these people? And if you are working in there, how do you improve things? What is broken? What shouldn't you take for granted? So these are the kind of things that we want to navigate this morning. So Anita, proceed.
Okay, we are looking at the dark side of big capital, and the slide here says big capital becomes dangerous when it can purchase opacity, mobility, and enforceability. Let me break that down for you. Opacity, we all know what an opaque object is. Opacity means the ability to hide. So when big capital can hide ownership, hide transactions, and hide decision-making behind complex structures, then accountability disappears. If you can't see what is happening, at least then that means you can't question it. So if big players have the ability to be opaque, then it means we can't question what they are doing. And then mobility means that the ability to move. Capital can move across borders, across industries, and across regulations faster than governments or communities can respond. And when capital is too mobile, it can threaten to leave if rules becomes inconvenient. So if it can easily move, if it can threaten to leave the economy and move to another place, that means it has ability to influence decisions. Then enforceability Enforceability means the ability to make things stick. Big capital can afford the best lawyers to write contracts, enforce debts, and protect assets in court. The law works for them, while ordinary people and small businesses can't afford the same protection for themselves. And you see, the danger is not big capital itself. The danger is when capital can hide, run, and enforce all at the same time. That combination can create an imbalance of power, and that imbalance is what leads to the problems we are to discuss in this presentation today. The arrogancy, the complacency, and you will see them as we proceed. So this is why we need transparency, strong institutions, and fair rules to balance opacity, mobility, and enforceability.
Okay, so let me just come in there briefly. Many a time you have a challenge. For instance, a bank has treated you unfairly. They have levied charges you do not understand. They have been opaque in their computation of interest that your company or you as an individual are supposed to pay. But then when you try to approach them to discuss these issues with them, you feel that you're being treated as a mere statistic, as someone who cannot lead the collapse of the bank, which is true in most cases in the bigger scheme of things. When you look at, when they look at the figures, they look at your CLV, the customer lifetime value, that is, coming from your side, and they realize that they can do without you. So the people that are working in these institutions then become complacent. They become arrogant in the way they treat you. They can be dismissive. They can be, uncompromising, even when you throw facts to their face. So these are things that happen, regularly when people, common people or small businesses, small and medium enterprises are interacting with banks. It could be in the area of credit management, especially when it comes to recovery of debts. They don't want to listen. They act with wanton impunity. Why? Because of the three things that we have talked about in the previous slide. Because they are able to purchase opacity, that means that there is not enough that is being done by the regulators to force these people to be transparent to customers or to their clients. So they end up making clients sign to terms and conditions that they do not fully understand. I have ever run a test on a bank in Uganda. I will not be disclosing names. They introduced a mobile lending product. So I ran a test on this bank. And when disagreements on computation of interests, I requested that they bring their A team from the team that is managing this product to the table. So we go into a meeting and I ask any of the team members there to volunteer and explain the computation of interest and how the amount accumulates to where we are. And there was not a single person who could actually explain the formula that is being used. So there's very little knowledge inside the institution. Then I asked them, if you yourselves do not understand how the products work and you do not have full product information, then how are you ensuring that your customers are protected? Because it is very possible that the IT team can manipulate the system and your business team is not aware of the manipulation, and this will disadvantage the customer. At the end of the day, the customer is not protected, and by the way, the regulator has not taken time to know that when this institution introduced a digital lending product, the product is, whether the product is transparent or to the customers or not. So like Anita said, the regulators are not behind the big capital when it comes to technology. So the speed at which technology advancement happens in big capital firms is higher than the regulator can cope with. It's the same in banking, it's the same in telecom. Let's say, for instance, that my data is being stolen by a certain telecom company. you are not going to be get help from the Communications Commission. Why? Because the Communications Commission does not have the ability to investigate in a short time and verify your claims so that they can rein in the operator. So, because of that technological gap or the technology adoption gap, the big capital funds are able to get opacity. They operate without absolute transparency. So when you are dealing with them, this is something that you need to be aware of. So the arrogance comes from the three things that we've talked about. Because they can say, they can threaten the government. As we have said, they are normally big taxpayers who can threaten the government. So because they can threaten the government with flight, saying that we can transfer and exit this market, so the government normally will yield to their demands. This is the problem that we get with big capital. And then what is the reason for the arrogance, the complacency, and the capture that they have imposed on the regulators, or what would be the gatekeepers. Yeah, what is that their influence keeps growing. Then you end up with a market like let me give you two examples. Kenya, which is a practical monopoly in the telecom sector. Then they come to Uganda, which is a practical in the telecom sector. So Uganda and these guys, they agree and they get convergency on an issue. They have the capacity to untwist the regulator and get away with it. So who is going to suffer at the end? It is the customer that is going to suffer at the end, because the regulator, who is part of government, is in fear of capital flight. So that is what happens when big capital's arrogance grows. That is what we get at the end. So now, this we want to isolate our critique into 5 forms. So we are looking at several things. For instance, the things we're talking about in telecoms, in banks, in insurance companies, they do not just stop there at affecting customers. What is that a lot of crimes are undetected. The crimes we are talking about are crimes that affect the credibility of the country. For example, money is able because big capital lends legitimacy to the practice of money laundering. And we will explain how that happens. Like cybercrime, people are using because big capital lends legitimacy to the structures that the criminals are using. It is not uncommon for people to hear of stories. People come to social media and complain that, look, somebody changed the telephone number connected to my bank account and my account was wiped. I personally have handled several cases of people who have similar scenarios. So, how did a change of phone number happen without a verification? Then we realized that it was an insider job. So, you know, the laxity and also the failure of the regulators to be hands-on and to be proactive in enforcing standards and consumer protection, such insider jobs can take place, they can happen. And then the customer who is disadvantaged will not get justice. Very few customers can actually take on these big firms. So is usually there is deliberate criminality or complicity. There is insider abuse that defeats controls, which I've just been explaining. Yeah, they connive internally to change details, and then there's aggressive, arguably lawful legal engineering. Let me give you an example. There is a judge in this country that I think fees onto my account. It had been suspended and it remained suspended for a period of 2 years. They continued charging a fee. What took them on, and I cited even legal precedents that this is unfair and it is a breach of their fiduciary duty. They have failed in the duty of care to protect the consumer, because you cannot rent to me a room in digital space, then take away the keys of that room, and then continue charging me, even when you know I don't have access to that room. So, default legal, stakeholder management, behavior, that we are going to manage this customer. They say, oh, we have commissioned an investigation, blah, 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 blah. Now, after doing checks and finding that I am not an ordinary customer, and they will not get away with this kind of legal engineering, they will get to the table and they concede that they will fix the charges over the period of 2 years. Then a gratuitous something horrible. This is the legal engineering I'm talking about. So, in these companies, that at no point should you accept. Now, they have no intention to change and run this, because it is these things that make them profitable. They are because they engage in unethical behavior. They're saying my voice is distorted. If you can hear me properly, just give me a thumbs up, and then we will proceed. Okay, fantastic. So, the transactions. Now, that is because I am not an ordinary customer. They can twist and get away with, because they know that I have the voice and the capacity to make noise. Interacting with an ordinary customer, they get away with it. But what is the opportunity that we are missing in all this? The opportunity that we are missing is that opportunity to engineer processes and make sure that they comply. And when missing that opportunity, it's because they know that the regulator can't add on them. The regulator feels that if you disorganize such a bank, if those of you who have for some time, you remember that in 2016 there was a bank that collapsed, and when it was about to collapse, all efforts being made by the regulator to make sure that it is the assets, the liabilities, okay, the customers as well, are transferred to another entity. That is according to the law. Before they took that drastic action, they kept on saying that the collapse of such a bank will have systematically destabilize, the country's financial stability. So they have to think that when there is flight, when there is collapse of a big capital firm, then there is going to be instability in the financial services sector, in the communication sector, for instance, and now the two sectors are fused. They are almost one. So that means that the regulators' hands are kind of tied. They have been boxed into a situation where they really cannot exercise effective regulation and moderate the actions of these people in public interest. So what again happens is unequal contracts. So unequal contracts between the firms and other stakeholders like consumers, and these transfer cost and risk. It is not unusual for someone to realize that when I went into a credit transaction with a bank, for instance, the bank de-risked itself to zero and transferred all the risk to me as a consumer. And how does this happen? It's because the regulator allows it to happen. And the consumers cannot say no at the time when they are when they are starting the relationship. There was a time when a bank sent me forms to open an online banking, so these online banking applications. I went through the terms and the terms and conditions, and I realized that this bank, which operates in many countries, in many markets in Africa, was saying that I should consent to using my information for marketing and their own internal improvements in other markets. And I said, no, this is wrong. And this is even against Uganda's data protection and privacy laws. So I said, I'm canceling this out on your document of terms and conditions, and I am countersigning. And it was a back and forth. And until someone higher up in their bank told them to just let it pass. But the staff inside the bank did not believe that a customer can cancel out what they have printed on those beautiful papers, glossy papers as terms and conditions, where they put clauses that you sign here, sign there, sign here, sign there, that someone can print something they don't agree with. It is lost on the staff working in big capital funds that you are entering into an agreement, because the way it has been structured by the lawyers working for these guys is that this thing is put on their headed paper. It shows the tilt, or that there is the balance of power is tilted towards the firm. It is towards you, the consumer. That is the pathology of big capital. Anita, run us through this slide, and then I'll proceed. I think your Anita is having a few challenges here and there. So what you're saying, our strongest argument starts with an evidence ladder. So we are saying that if you come up against big capital, these are the things you should be aware of. What enforcement finding, official risk assessment, investigative red flag, structural inference. So now, I'm going to break down these things. Okay, the principle of this is that credibility is what turns critique into influence. So, let's take, for instance, the telecom sector. There is that we can identify. For instance, so many customers are vulnerable to data theft. You buy a data bundle, and that data bundle disappears within minutes. There's that used, for example, 2 GB of data in 5 minutes. These are things that happen every now and then. It's not just in telecom that we are talking about. The big players in Uganda, for instance, have this problem. But then, you know, that happened to me in this one as well. So the are thieves. So you take the risk of talking about collective guilt. You feel like at the end of the day, I think we are just vulnerable to these guys, and there's nothing much that we can do. But if you pick and assess the risk properly, for instance, you ask yourself, I have been to this service provider. They are giving me an internet service. However, do they give me, in their customer journey, do they give me the ability to be able to use that usage statement? Do I have the ability to look at the usage log, to know how much data I've used, which internet resources I have visited in this period? Which sites have I visited? How much data went onto those sites? And then show you a statement of all your purchases. If there's any refund, is the refund reflected in that statement? If you look at certain players, if you look at a player like Safaricom, they have a user portal where you can go and access your data usage statement. But when you come to Uganda, you still don't have that in many cases. You cannot see what you used. So when you start complaining, they start managing you. How do they start managing you? They box you into their structural inefficiencies. So they box you into saying, open a ticket, create a ticket. So after you've created a ticket, or if it is a bank and you've walked into a banking hall, they say, you know what, you fill this form and wait after 24 or 48 hours. Then they tell you, okay, it has been forwarded to this team. This team is handling. Then after I tell you, investigations are still happening. We are going to get back to you on this. Please wait. They are believing that you are going to be worn out. They will out with the bureaucracy. Yeah. So at the end of the day, you have to scrutinize them. So you actually pursue them. But if they check and see maybe this is a high flyer in the corporate sector, what have you, they will come, they will step forward and maybe share logs. They will offer to share logs and these kind of things. So in the end, there is opacity. But like I said at the beginning, these big capital funds also contribute to facilitation of crime. They contribute to things like money laundering and the like. So, for instance, where they say Uganda's rating by the FATF, has improved. Like in 2024, we were removed from the grey list. Yes, because Uganda has now increased monitoring activity. Then you have the Eastern and Southern Africa Anti-Money Laundering Group also recording progress on the technical aspects. So you start asking yourself, what is the contribution in all this? And not only Uganda, actually, the actual problems that resulted in these weaknesses that had put us in the grey list in the first place came from the big capital firms, the supervisory institutions, the weak regulators, that put us there. But they want you to actually think you are guilty of this at the very start, yet you had no role to play in it. So, for instance, in Uganda, we have the Financial Intelligence Authority, which treats law as accountable persons. So, what criminals decided to do was to, for example, criminals is engaging in what they call wash in Kenya. In Uganda, what they call, some kind of organized crime called obufere. So someone is trying to bring in money. Let's say they are claiming to sell precious minerals to certain guys. Money has to be paid into their account. So what happens is these guys know that it will be easier for the Financial Intelligence Authority to scrutinize them. So what they do, they connive with which have been given special treatment by the financial sector players, including the Financial Intelligence Authority. So now you can see that the law steps in and receives the money because it is already registered with the FIA as an accountable person. They receive, in so doing, the actual criminals in the background. So they receive the criminals. That is also transparency. So the challenges we are talking about here result from weak supervision, low capacity. Low capacity, for example, the Uganda at one point in 2023 was reported to be having only officers that were issues of money laundering in the institutions that we have, you can imagine. And they did not have the systems that were commensurate with the task. So that is also another thing that I have mentioned. Then you have systemic challenges or systemic needs. So when you set up rules, they need data, you need to do inspections, you need sanctions, and then you need to build institutional capacity. These are also lacking. Says, for example, in the communication sector, the Communications Commission has no capacity to say we can build to investigate telecom in in unethical behavior, unethical treatment of a customer by 24 hours. So from the institutions that have been mandated with the regulation, maybe big firms to get away with a lot of unethical behavior, unfair behavior that puts consumers at a disadvantage then the country's reputation gets damaged because this dirty money will come into the system, it will be cleaned, criminals will take that money, and then we will suffer. So you will try to transact through some fintech app, and then you will realize because you are from Uganda, you have been bad because of the reputation that the country has in the international arena. And why is that so? Is because of the failure by our regulatory agencies to effectively supervise big capital firms. So what we are saying is big capital is most dangerous when it can buy opacity. That's what we've been explaining, mobility and enforceability, and make the public carry the cost. In short, the customers, the citizens of the country, carry the cost of the benefits of big capital. So the customers need to put pressure on the people actually make the laws. The people that appropriate funds to the regulatory agencies. For instance, Parliament should receive petitions, should receive citizens of Uganda on these funds. So that we can put pressure on the regulatory agencies to catch up in terms of capacity, in terms of technology, in terms of being pragmatic behavior. So doing that, we also need to know that another problem goes beyond the firms themselves. It goes to the lawyers, the legal fraternity. Lawyers are the architecture around this capital. Uganda's legal sector is officially a high risk sector because, like I've explained, the lawyers are in structuring tax and property bills, holding client money, as I've explained. Lawyers are also helping these law firms, these big capital firms, to come up with unfair conditions to the consumers. The public good is not actually given a vantage position. So what happens is that the lawyers do everything in favor of their clients. And the regulators that are supposed to actually look into these things don't scrutinize these things. I'll give you an example. I know of a bank where a client signed in for a digital banking product. The digital banking product did not have checks to verify that when you add a beneficiary into the system, you're adding a beneficiary that you will be sending money to, you should match the name and the account number. That pair, the pair of name, the account name and account number, something that is done over the counter. When you go to deposit funds over the counter, that matching happens. But this particular bank, their product was biggest players. They were not doing that matching. So as a result, the client, our client, who was their customer, lost close to 200 million in the process. Because what would happen is an errant staff within the client's organization would put in, let's say, an organization, let's say Total Uganda, and that's the name of the account. Then they put in an account number which belongs to themselves. Then they transfer money there. So the bank system did not have sufficient checks to validate that pair of name and account number. So money will be transferred. The fellow moves to an ATM, withdraws the money, and goes away. Now, when our client confronted them, the bank said, read the terms that you signed on that digital product. The clause saying, as a consumer, you are accepting liability for losses that come from this. Can you imagine? That clause makes the consumer to sign off their protection. Yeah, and they are saying, because you said you are taking liability, losses will come out of the usage of this product, we are not going to compensate you. Now, how does this fly? Why doesn't the central bank, for example, look into the terms and conditions of these products? So there's a regulatory gap there, and this is being facilitated by the law firms that are retained by these guys. So what I'm saying is the gatekeepers, because the gatekeeper chain. the regulators, and then also that are working in cohorts with both the regulators and the firms, because you retain the same, the big capital firms retain the same lawyers as the regulators, and that creates a conflict of interest on the part of the lawyers, and it makes the whole thing just messed up. So some kind of legitimacy in courts. Yeah. So each service is viewed as legitimate in sequence, which controls leadership move. It's talking about money being moved in that is supposed to end up with criminals, but it is disguised because it goes through the lawyers' accounts and all that. So you think this is ordinary trade. So the banks are looking at this as ordinary trade, and then at the end of the day, the traceability disappears. So creates companies, trusts, and tax opinions. They move accounts, transfers, and trade finance. They convert property, security, and investments, and then enforce mortgages, collections, and litigation. So everything looks legitimate. Banks are the ones they are working with, and they are their enforcement allies. So behind what is crafted as ordinary trade, someone says, oh, we are dealing in this, we are selling gold, or we are selling, some people say they're selling ivory, which is never there. Others claim to be selling timber, which is never there, and all that. They can launder money, they can engage in organized crime, and this is being facilitated by the banks because it has been structured as genuine trade. So it is what we call trade-based laundering. So when they are exchanging documents, because the bank will tell them, bring supporting documents, they will be cases that they have generated, and then the bank will attach. So when they do that, it increases both preventive capacity. It prevents the ability of these institutions to scale their preventive capacity, because this is disguised as trade. It is disguised as legitimate trade. So it facilitates laundering, it facilitates organized crime, and then damages the reputation of the country, and we all lose. So in a nutshell, the capital power loop can be summed up as this. We have opacity, where ownership becomes harder to see. Nobody sees the actions that we are considering detrimental. Mobility, so value moves as, like we have said, there is trade-based laundering as well, and there is always a threat of capital flight when regulators try to come, hard on them. Enforceability is a problem because private claims become durable. They'll take forever to be resolved, and then you end up with institutional capture. Our regulators are captured. So the telecoms in a country like Uganda control the Communications Commission, and it's not the other way around. So you find some people in the Communications Commission cannot stand up against big capital firms. So as we wind up, we now turn to what would be the recourse for ordinary citizens. Yeah, we would also want to run to the courts of law. You want to find refuge in the judicial system. But if you want to find refuge in the judicial system, there are things you need to be aware of. There has been some kind of improvement over the years with the commercial court in Uganda coming up and all that. Yeah, there are cases. I'll pick up a few cases. Yeah, that have been pronounced in our courts. There was that case of Chaudhry. He sued a bank for an unexplained disbursement shortfall. There was the case of Birungi, 25 million shillings lost. The bank failed to prove enrollment authorization for that money. There was a case by Ainebiona amounting to 80.45 million. Freeze held unlawful after more than 2 years. So there are a number of cases that have been coming up. We have had cases where, some people try to hide behind Ugandan laws to avoid paying off credit facilities that they have taken because maybe the facility was given through syndicated loaning, where you have, say, a Ugandan bank working with a sister or a parent company, say in Kenya, to access money and lend to a customer here. So the lawyer for that customer steps up and says, the bank which actually gave out the loan is not licensed to do business in Uganda. The Supreme Court actually gave a landmark decision where that was struck down, yet it had gone through at the High Court. And you know, a big capital player was getting away with this. A person had managed to run the responsibility of paying about 120 billion shillings, which they took in credit, and then they are being aided by, you know, law firms to get out with that. So there is some bit of improvement in our courts, but a lot of work needs to be done. What we need to carry on doing is sensitization. We need to sensitize the citizens. You and I, we want to sensitize you and let you know that when we let our regulators sleep, when we let the the regulators that are supposed to do supervision or regulation in these sectors to sleep, the private sector players that are what we are calling big capital will take advantage of us. They will compromise, continue to compromise the regulators. They will also compromise the political class, and we will. So what is the solution? The private sector, you and I, the small businesses, have to become a watchdog such that you complain. You need to be aware of the channels of complaint available at the regulators. For instance, what are the channels available at the central bank for you to complain? What channels are available at Communications Commission for you to complain? And now there is also an avenue you can use through social media. You can make some noise, and these guys are actually forced to do something, to run away from the conventional stakeholder management approach. Make some noise if you are the consumer that is being disadvantaged. Make some noise. These regulators have, you know, consumer protection laws, regulations, guidelines that are available on their websites, but they themselves are not enforcing them. And if you are not aware of them, the existence of these regulations, then you will take advantage of them. But the moment that they realize that the consumer is petitioning, is complaining, and is quoting and referencing these consumer protection guidelines or regulations, then they tend to take you more serious. So I encourage you to go and check out these things, visit the websites of these regulators, read about consumer protection, check the terms and conditions that are that you have signed with these companies before you sign up for a digital learning product on a telecom platform, on a banking platform. Did you read the terms and conditions? Look at the aspects of data protection. Look at the aspects of consumer protection and see if you can actually take advantage of that when you are making complaints. So an enlightened consumer base is the remedy to big capital misbehavior. It's the remedy to big capital malpractice. So the remedy we talk about is counterpoint. We are not saying that these businesses should be taken down. We are not saying we should not be ambitious to have big institutions, but we are saying Uganda does not need smaller ambition. We need institutions that are strong enough to make scale answerable. That even as companies grow big and scale, they should be transparent in the way they conduct their transactions. They should be accountable to stakeholders. The gatekeepers that are put in place by the law must also be accountable, and redress does not require a high court battle. Some of the things can be sorted without resorting to courts. So that is what we are saying. So we are saying that as citizens that interact with big capital on a day-to-day basis, you must make power answerable. Because big capital uses money to amass power, they can compromise stakeholders within the chain. So make the stakeholders answerable by arming yourself with knowledge. Where do you find that knowledge? That knowledge is found in the law. For example, you have the Financial Institutions Act, you have the Anti-Money Laundering Act, you have you have consumer protection guidelines, consumer protection regulations, and regulators are supposed to follow. Read these things. There are cases that have been decided in court that can give you precedent that you can use to take on these players. Be vigilant so that big capital players do not get away with bad manners, misbehavior. That is what we are saying that power must answer. So if you have any questions, or I could call one of our colleagues to talk about some of the products that we have. Yeah, Chris, come in.
Yes, thank you for that. That has been an insightful presentation. Today, I am here to talk about a product that we at Magezi Harvest are passionate about, and one which has become a trusted daily workhorse for some of our clients. As we all know, engineering and construction companies don't run on projects alone. They run on hundreds of decisions happening around these projects every day. Materials have to be requested, suppliers have to be approved, invoices have to be checked, teams have to be coordinated, vehicles have to move, and site activities have to be tracked. And somehow, management needs to know whether all of this is actually moving the project forward. The challenge is that these activities often sit in different places with different people, systems, and processes connecting them. The work may be moving, but the information needed to manage it isn't always moving. My name is Chris Rangala, and I'm here to offer you an insight into what Magezi Engineering ERP is all about. You see, when there's operational friction, project information stays with different teams. We have the procurement has its own requisitions and supplier records. Finance is working from invoices, payments, and financial records. Fleet has vehicle movements and maintenance. And management has to bring all of this together to understand what is actually happening. And that often creates gaps. A purchase may need to be approved without everyone having the same view of the project. A project manager may need information from procurement before making a decision. Finance may need to trace an invoice back to a purchase order. Management may need to know that something is moving and a bottleneck is appearing before everyone else does get to understand this. And none of these problems necessarily come from people doing poor work. It's that the information is fragmented. And when information is fragmented, visibility becomes harder, decisions take longer, and small gaps can become expensive. That leads us to an important insight. For a contractor, the real value of an enterprise system isn't simply having more software. It's having the operation connected. We then move from, can we record this transaction, to can we connect this transaction to the work it belongs to? Can a requisition be connected to a project? Can a purchase order be connected to an invoice? Can project budgets be compared with actual spending? Can management see which approvals are waiting? And when those connections exist, information becomes more useful. People spend less time looking for answers and more time acting on them. That is the thinking behind Magezi Engineering ERP. This platform brings the cooperation into one connected platform. Projects in engineering, procurement and supply chain, finance and accounting, HR and payroll, fleets and assets, sales, CRM, and compliance. The point of focus is not simply the number of modules in the platform, it's how they connect and how access can be configured around the company's roles, departments, and approval structures. So instead of forcing the business to work around the software, the platform can be configured around the way the business actually operates. Implementation also goes beyond installation. The deployment includes workflow mapping, financial and tax configuration, data migration, and training for the administrative, engineering, and site teams. So our objective here is not to give you more software, but to give the people running the businesses a clear view of the business they're running. As I close, we've spent this presentation talking about the importance of visibility, accountability, and better decision making. These same principles apply inside the businesses we run. So whether you're managing multiple construction projects, coordinating procurement across sites, managing a growing workforce, the platform brings those operations into one connected environment where you can see how your projects, procurement, finance, people, and assets can work from the same operational picture. Our goal isn't to give you business in terms of software addition, but to give you and your people better visibility, better information, and a clear path to action. Thank you for the time. I would like to hand it back over to the host of the day to continue with the program.
So if we have any questions from what we've been talking about today, you can type the question in the chat box. Because we started about 5 minutes late, so we will stretch by 5 minutes to 11:05. So we will use those 5 minutes to respond to any questions that are coming in from the people on the call, and then we will bring this to an end. You could put up your hand and we give you the microphone, or you could type your question in the chat. Just of what we've been discussing is that at the end of the day, the big capital we've been talking about is characterized, its pathology is characterized by 3 things: arrogance, complacency, and capture of our institutions. Consumers or customers are treated as mere statistics. They can be done without. So they say you are too small to bring about any impact on the bank if you quit, or you are too small to bring about any impact on the telecom if you quit the service. So they treat you as if you are a piece of trash at times. And then that, of course, is coupled with complacency. So there are poor systems. As I have told you, some of these do not even have systems that are transparent in their customer journeys to enable customers to be able to follow usage of the services. So the poor systems survive because market power that these firms wield protects them from scrutiny by the people that are supposed to scrutinize them. Yeah. So they are captured. The regulators who are supposed to regulate the activity of these firms are captured by the same firms, so they become toothless. So you have regulators that are toothless, and sometimes even when they are not under capture, it's because they don't have the capacity to match up. Because we talked about a technology gap that exists, there is an innovation gap, an innovation lag. That the rate at which, let's say, the telecoms are innovating is not the rate at which the regulator, let's say the Communications Commission in Uganda or the Communications Authority of Kenya, is innovating. So there is that gap, which also creates a capacity problem for the regulators. And then what you end up with as an outcome is that these firms become so powerful, their influence grows faster than they can be held to account. And the consumer continues to suffer. We have told you at the end of our presentation We have told you what the consumer needs to do, that the consumer in the private sector, that includes you and I, needs to become a watchdog. You need to become more vigilant. You need to read these documents concerning consumer protection, know your consumer rights, and then be able to put up a fight when you find yourself involved in an ugly situation with these big capital firms. And that should not stop there. You can also take advantage of tools such as social media platforms to be able to bring these guys to account, and then to draw attention of the political class, for example, the legislature that makes the laws and also does appropriation to the regulators that are supposed to rein in these guys. So that is what we have called counter power, not anti-business. So counter power is what we are offering when dealing with these institutions. At the end of the day, we will be in position to make power answerable. And here we are talking about power that comes from capital. As I wind this up, I'll leave you with a quote, not for the story. So somebody tried to summarize what politics is to a class and said, take an example of a home where you have the father, the mother, their daughter, and a maid. So the husband starts an affair with the maid. The daughter gets to learn about it and not do much. Why? Because the father represents the capitalist, because he has the money, so he has the power. So it is the money that gives him the power. That is now the big capital player here that we're talking about. The person in terms of administration is the mother, that is the government. This is the thing supposed to benefit from what the capitalist provides, from what the father provides, and must follow the rules set by the government. That's the administrator of the home, the mother. So the citizen, and the maid represents the working for the capitalist. So when it starts an affair, that's the father starts an affair with the maid, even if the citizen gets to know, many times the citizen's default setting or disposition is to go mute because they do not want to offset the balance of power. They feel to the government, the capitalists might withdraw. Yeah, so that is exactly the scenario that we find ourselves in when dealing with big capital. So big capital has the capacity to control political power, and once they control political power, it means the government goes to sleep. So what this guy was saying is that when the government goes to sleep at night, the capitalist, that's the father, sneaks into the room of the maid. Even when the citizen sees him sneaking in, the citizen will remain quiet because they are afraid. And what we are saying in all this is that the citizen should not remain quiet. They should be able to rope in the government, put pressure on the government to rein in the capitalist, because it is only the government that can rein in the capitalist. That is why power must be brought to answer. Thank you very much for attending our webinar today, this week. Have a wonderful weekend. Bye. We'll see you next Friday.
Ronald. Yes, sir.
Yes, Addison.
Yep. Well done. It's been a nice.
Thank you.
I've been in listening.
Yes.
I
Yes.
didn't want to ask you questions. I know where I will ask you questions. Thank you.
Okay.
Thank you very
Thank you.
much.
All right. Thanks for coming in.